expecting a return to full-year profit as a result of stronger sales. We've seen that go up 13%. The global economic picture really holding in your favor right now.
Well, yes, but remember, it's coming off a really miserable fourth quarter. The fourth quarter sales just plummeted. There's no other way of putting it. We've seen demand growth come back. We're very careful, though, to ascribe that to restocking rather than underlying demand growth. But yes, very bullish on quarter one. Prices ticking up quite nicely. There's quite a long period in the last year where there was a disconnect between the momentum of raw material prices, which are just going up, and steel prices, which were not. So at long last, steel prices started to follow raw material price rises, and long may it continue. And
so we're looking at now basically a loosening off that margin squeeze that you had been experiencing for most of last year.
Precisely. I must, though, also state that in the case of ArcelorMittal South Africa, as you saw in the results, we were able to contain quite a lot of that margin squeeze. We reported production costs going up 4% for flat products and 5% for longs, because we did still acquire iron ore at really good prices compared to global benchmark prices.
Let's take a look at this picture, because we've seen the impact of a stronger rand and then the increase in production volumes. It's been realized in lower cash costs for the business. There are threats to things swinging the other way, where the possibility is for a weaker rand coming to the fore and possibly rising inflation as well. How much of a challenge is this going to be, maintaining cash costs?
Well, as we have said many times, for us as export-facing manufacturers, the issue of the rand strength plays in our disfavor far more than inflation could ever play the other game. So we would rather contend with higher inflation than with a stronger rand. So for us, that would be absolutely the right direction for the rand to weaken. So we're not particularly concerned about that. If you think back to 2007, 2008, levels of inflation in South Africa were relatively higher, and we certainly navigated that particular cycle very well. So we don't have a concern. We think that our business would really profit from a softer rand.
Of course, rising iron ore prices, as you alluded to a little earlier, adding that further pressure. We've seen a 119% increase in those prices so far. What's your outlook on that front?
Well, remember, our iron ore prices are a special deal that we have negotiated with Kumba. It's an interim agreement, as it's been called. It's meant to tide us over until the conclusion of the arbitration proceedings. And at this point, that contract comes up for expiry at the end of July 2011. The most likely outcome is that we would be negotiating an extension of that agreement with Kumba, hopefully then to take us through to the end of the arbitration. Clearly, this time last year, we thought the end of the arbitration might be in July this year, but that's not going to happen.
Just looking at that then, I mean, where we've got these accusations and counter-accusations between Kumba Iron Ore, ICT and the DMR as well. At the heart of the tussle is this, getting a contract at iron ore at cost plus 3% from Sishen ore mine. This is still very much a possibility for you.
Well, I think we also, like you, watch this particular drama unfold, and we are bystanders, by the way, in that particular drama, because ArcelorMittal is not at this time a respondent or an applicant in any court case. However, it has to be said that for us, we would hope to see an outcome of this issue very quickly. To your right, it's the cost plus 3% contract that is really the pivotal feature, and really the only entity that has a supply agreement of that nature with Kumba is ArcelorMittal South Africa. We believe that to still be valid, despite what everybody else may say, and it can really only be decided.
Because the accusations, is that ArcelorMittal globally has not lived up to that agreement made with the government when it was allowed to buy the old ISCOR. Does that place you at a disadvantage in any way in trying to win over that right to receive iron ore prices at cost plus 3?
The iron ore supply agreement with Kumba is not conditional on any steel price at all. Not even a little bit. It is a contractual obligation entered into freely between ArcelorMittal South Africa and Kumba. At the time, it was very clearly set out that it would last for the life of mine of Sishen ore. There was no quid pro quo on the part of ArcelorMittal South Africa.